Chairman Powell, I think, is this too good to be true? Because you've got 4 years here of unemployment below 4%, very low, substantially below NAIRU, what appears to be NAIRU, but no reaction of inflation there. And so I don't think that's ever happened since the 1960s. Why do you think it's going to happen now? Or in the alternative, is this forecast for unemployment just being driven by your confidence intervals to the extent that, well, we don't know what else to do, so just extend the line out till something happens?
No, you're right. The committee forecasts, what they show in general is an economy where unemployment remains in the high and middle threes throughout the entire forecast period, and inflation remains very close to 2%. That is what the forecast shows. And that is based on our understanding of the way the inflation process works now, on the fact that the inflation seems to be fairly non-reactive to changes in slack. That is to say, a flat Phillips curve. And it's a world of strongly anchored inflation expectations. And that's not just our forecast. That's many forecasts. So that is the forecast. So you may ask, I mean, the sense is, what does the longer run natural rate of unemployment mean? And so that really is a longer run concept that we think the economy will return to over the longer run. But obviously that longer run, it's not creating problems in the short run for that forecast. Now, let's just admit that the inflation process has changed dramatically from where it was in the 1960s to where it is now. It's in a good place now. We can't take for granted that it will remain the way it is. And, we will be, of course, watching carefully. If inflation reacts more strongly or more weakly to this strong economy, then we'll adjust policy appropriately.
If I could follow up on that, what are you buying with interest rates?
Well, interest rates, of course, have effects on growth, have effects. I mean, I guess your question was, what are you buying by raising interest rates? The question is, what would the economy look like if you didn't raise rates? It would look very different, I think, if you didn't raise rates. We're always trying to, work our way between the two problems we face. One is that if we move too quickly, we can, snuff out a recovery unnecessarily, and inflation falls short of its 2% target. Or if we move too slowly, we have an economy that can overheat. So that's happened through history. We don't see any signs of that now, but we're always trying to navigate between those two shoals. And we think that gradually, raising interest rates is the way that we kind of take both of those risks seriously.